Okay, in set A, we have discussed the parties of the business on financial transactions. Who are the parties? So let us review that before proceeding. So we have owner, financial institutions or banks, suppliers, vendors. Okay. In set A, we have discussed the transactions involving the owner, financial institutions, suppliers, vendors, and creditors. Okay. And in this set B, we are going to discuss the financial transactions with employees, landlords, and agencies, and customers. So just to remind us, what are the discussions with the or financial transactions with the owner? So we have here the investment and withdrawal of investment, and financial institutions. We have the business borrowing money from the bank and then paying the loan to the bank. And with the suppliers, it's a purchase or buying in cash, okay, or buy on account. Buy can be also the verb that can be used is purchase on account and pay the account. Okay, in this lesson, we will be discussing the transactions with employees, landlords, and agencies, and with customers. So, as far as employees, landlords, and agencies, we are going to buy the services in cash, okay, or record because we have already availed the services. So, we will already record that if we haven't paid it, we will record the account, okay, and then we will pay the account. Okay. With customers, we are going to provide services in cash. So we are already giving our services, our service income. So in customers, we have our service income here. So our service income in cash or providing services or service income on account, meaning the customer will pay later. Okay. And we are going to collect the account from the customer. Okay. Let's start. Okay, so with employees, landlords, and agencies, this is our business. Okay, the accounting equation of our business. Okay, please note that as I have said, most of the transactions with regards to employees, landlords, and agencies deal with expense. So you will note here that there is an expense account here. So here, assets and expense are both debit. Liabilities, equity, revenues, we have learned are all credit. Okay, the transaction is paying the employees. Okay, so this is the detailed transaction. Paid salaries of employees of 18,000. So in this case, what did the business receive? The services of the employees. And in accounting, that services is called salaries expense. Okay, normally you can put here salaries expense or plain salaries is basically the same. Okay, it's already understood. Okay, so we receive the services of employees, that is the salaries, and we gave what when we paid? We gave cash. Okay, so credit cash. We debit salaries and we credit cash. Take note of how we present the debit. The debit is written first and then indent a little bit. There is a little indentation and you will write the credit. And as far as the amount, here there should be a column here for debit and a column here for credit. Okay, in the columnar journal that you are going to use. Okay, so if we are going to pause this or record this in our uh, reflect this in our accounting equation, salaries, so there will be an increase because it's debited. So salaries will be debited, an increase of 18,000, and there will be a reduction in cash because it's credit. Okay. Okay, next we will payment of the rental, paid the rental. So the transaction is this. pay the rental for the month of, for example, month of January, 20,000, or pay the rental for the month of 20,000. Okay? So when we pay the rental, okay, what did we receive? The space that being provided to us. And in accounting, that space that we have paid is rent expense. So we receive rent expense and credit. What did we give when we paid? We gave cash. So class, if you see the word paid, meaning we are giving cash. Okay? When you say paid, paid means we are giving cash. So we credit cash. Okay, so in this case, if we're going to reflect this in the accounting equation, we increase rent expense by 20,000 and credit cash by 20,000. Okay? Okay, let's move on. Let's continue. This time, the transaction is record unpaid bill. So in this case, the transaction is this one. Received and record the utilities bill for the month amounting to 3,000. We only receive it, but we already received the bill. We want to recognize that we have an obligation to pay. We receive it. Okay, so we can record that we have a liability to pay. So when we receive it, uh, we debit the utilities expense. We receive the utilities, the bill from or the services from Meralco, and credit what? Because we haven't paid, we will not credit cash. Okay, because here the transaction is just received and record. It didn't say we paid. Okay, so in this case, we have just to credit accounts payable. We will acknowledge that we have an obligation to pay. So we will credit accounts payable. Again, class, for transaction with employees, landlords, and agencies, the account that we will credit for our promise to pay is accounts payable. However, for the bank, the account that we are going to use is loans payable or notes payable depending on the transaction. If the bank's transaction indicate that a note was issued, then you have to use notes payable. So in this case, how are you going to reflect this in the accounting equation? You debit utilities expense, so you are increasing the expense by 3,000, and credit accounts payable, so you are increasing liabilities in the form of accounts payable by 3,000. Okay? And the next transaction is you have to pay the account. You are going to pay the account. And the detailed transaction is this: pay the 3,000 account for utilities. So this transaction is related to number 3. We are paying this 3,000. So in this case, what did we receive? We receive a reduction of our accounts payable. So we are debiting accounts payable to reduce our obligation or our liability. And because we paid, we give cash as payment. So in this, if we are going to reflect this in our accounting equation, we debit accounts payable. So in this case, there is a debit there, so there is a reduction of accounts payable by 3,000. Here there is a credit in cash, so there is a reduction in cash by 3,000. Okay? Okay. So next, it will be transactions with customers. So with customers, this is our accounting equation. So normally our transactions with customers deals with revenue. And please note that the revenue is on the credit side. Okay, so you have probably noted that expenses are all debit. Okay, are all debit in this basic accounting. Expenses will always be debit, meaning increasing the expense. Okay, except for adjusting entries, because adjusting entries are corrections. Okay, so the transaction for the customers will be provide services in cash, meaning the business gave services. So we will generate service income in that. Provide services in cash. So this is the detailed transaction. Rendered cleaning services to Mr. X. Okay, this is supposed to be rendered spa services because cleaning services in terms probably of the cleaning services in relation to spa to Mr. X for 24,000 in cash. So in this case, okay, when we rendered, okay, what did we receive from Mr. X? Okay, when we give our services, we receive what? We receive cash, okay? Because it says here in cash. So what will be our credit? Our credit will be, because it is our revenue, it will be our service income for 24,000. You got it? So when it comes to customer, normally we generate our service income. So depending on what did the customer use to pay us, whether in cash or in the second. And by the way, if we are going to reflect this, we will receive cash. So we are increasing cash by 24,000, and we are crediting service income. So we are increasing service income, our revenue, by 24,000. Okay, you will take note that our equation is balanced. 24,000 here on debit side and 24,000 here on credit side. Okay? And next is provide services on account. So we are providing services on account. When it is on account, it means that the customer did not pay yet. Okay? The customer will pay later. So in this case, on account in accounting is accounts receivable. Oh, by the way, this is the actual service transaction. Rendered cleaning services to Miss A for 10,000 on account. Okay, so the entry would be, what did we receive? We received a promise from Miss A, a promise to pay. So that is accounts receivable because we gave our services. Okay, so Miss A owes something to the company. So debit accounts receivable. On account means accounts receivable. And then credit service income. Okay, so in this case, there is an increase in accounts receivable by 10,000 and an increase in service income of 10,000 because here there is a debit of accounts receivable, so meaning we are increasing the asset, and a credit to revenue, meaning we are increasing the revenue. Okay? And next is collection from customers. Okay, and this is the actual transaction. Collect the account from Miss A. So we are collecting this. Okay, so here, if we collect, what did we receive? When we are collecting, what we receive? We receive cash, right? Because we are collecting. So we debit cash of 10,000 and credit what? What did we give? We gave a reduction of Miss A account. So meaning Miss A has no more account because she has already paid. Okay? So in this case, if we are going to reflect this in the accounting equation, we receive cash in the amount of 10,000 and we reduce another form of asset, okay, which is accounts receivable by 10,000. Cash and accounts receivable are in the column of assets. So if we increase one asset, we have to decrease another asset to balance the equation. Okay, the effect of this is zero. Okay, understood, class? So here you have here. Oh, by the way, there is here a summary of journal entries. So here for investment, this will be how you will do the journal entry. We debit what will be invested. It's either cash, equipment, okay? What will be the investment by the owner? And we credit the capital, owner's capital. And withdrawal by the owner, okay? We debit owner's drawing and we credit what is withdrawn. If cash is withdrawn, then we credit cash. If supplies is withdrawn by the owner, got supplies from the business, then we credit supplies. Okay? Then the transaction with the bank. What are the transactions with the bank? We borrow money, we or loan from the bank. So we debit cash because we are receiving cash from the bank, and credit loans payable or notes payable if the document says that there is a note. Okay? And if we will pay the loan, okay, we are reducing the loans payable, so we will debit loans payable and credit cash. We are giving cash. Okay. And if we are buying from supplier or creditor, we will be, if we buy in cash, we will debit what we have bought because we receive what we have bought, and credit cash because we gave cash for the equipment that we have bought. And if we are buying on account, we debit what we bought. Okay, if we bought equipment, again, and credit because on account we will pay later, so we credit accounts payable. So we need to pay this. So if we are paying that, we pay the account, we debit the accounts payable because we are going to reduce the accounts payable with our payment in cash. Okay? Okay, so next we have also discussed transaction with employees, landlords, and agencies. So when we pay the employees or pay the rent, so we debit what we are paying. Salaries expense or salaries can be accepted, or then rent expense, and credit cash. And then if we have already availed the services and we have like utilities, normally we have already used it before we receive the bill, and we want to record that we have unpaid utilities expense. So we debit the utilities expense, what we have already availed of, and credit a liability accounts payable, then obligation to pay. Okay? And if we are going to pay this accounts payable, we debit this accounts payable and then credit cash. With customer, okay, we are providing services to customer in cash, so we receive cash if it is paid to us by customer and credit service income. Okay, and if we are providing services an account, the customer did not pay us, so the customer has an obligation to pay to us, so that is accounts receivable from our customer and credit service income. So we will collect this. So if we have collect this, then we receive cash from accounts receivable and credit accounts receivable. Okay, take note, class. Take note. Here, normally what we are buying, okay, is more or less assets. Okay, equipment, furniture, supplies, insurance. And if we bought insurance, it means that we have not used it, so we will use the prepaid insurance, prepaid rent. Okay. Here, with the bank, if we have transaction with the bank, our the cash that we receive, what we are using as a credit is loans payable. However, for supplier and creditor, if we bought on account, the account that we are going to use is accounts payable because this is trading. Okay, if it is a trade account, we will be using accounts payable, but if it is with the bank because it's a loans payable. Okay, so here also with the landlords and agencies, like for payment of utilities, or even for the rent, payment of rent expense. If we haven't paid the rent, we will be using accounts payable. Okay, so here the account is accounts payable. Okay, all expenses should always be debit. Okay, because that's the normal balance. All the assets should be debit when we are buying it because that's the normal balance. Okay. And here, class, for customers, always service income is credit. We can just we have to whether we the customer paid us, so we debit cash. If the customer did not pay us yet, and if the transaction is on account, we debit accounts receivable. Okay. Let's move on. I just want you to give you the format of journal entry. You have to know this. So normally, I'm asking my student to do the journal entry in two-column journal. It is called two-column journal because of the money columns. There are two money columns. There are several columns, but in accounting, when you speak of two-column journal, you are referring to the money column. In this case, the money column is two. One, two, okay? So this is the format of the book of journal, okay? And this is called general journal, okay? The book being used to record the journal entry is general journal. Okay, so the general journal has several columns, and the first set of columns is for the date. This is how you are doing for the date. Uh, the account, the titles are date, account title, PR, debit, and credit. PR means post reference. Okay, we will not be using this at this time, but you will learn this from your basic accounting. PR can also be called folio. Folio, Folio. Okay, this is how we do the journal entry. We put the day, the year, okay, then after that, the month and the day, okay? And then our entry. So here, the debit is written right after the line. So we debit cash, and then the credit is indented a little bit, and credit owner's capital, okay? And the amount is written on each value is written on each column, like in this case, 50,000. There is a bold line in money column, okay, that denotes the thousand. You do not use comma and period for money columns, okay? We just follow the columnar writing of our amounts. In this case, 50,000 and 50,000. So your debit and credit should be balanced. And then your explanation will be written indented after the credit. So receive initial investment from owner. Okay? And in this case, then you have to have a space, then write the next transaction. The next transaction, you only have the day. So in this case, the transaction is debit cash, debit equipment, and credit owner's capital. So this cash of 100,000, equipment of 40,000, owner's capital credit of 140,000. Take note that the debit is 140,000, the credit is 140,000. And write the explanation, receive additional investment from owner. Okay? Why did we know that? Because the owner's capital is credited. Okay? Next is write the day again, and then cash here, debit cash, 200,000, credit loans payable short term, 20,000, loans payable long term, 180,000. So here we have one debit and two credits. Here we have two debits and one credit, but same thing. The total debit amounts are equal with the credit amounts. Okay? And then here the explanation, borrowed money from the bank. Okay. So this is the format of